Well, good day, traders, and we've been back, sort of been away for a couple of weeks. So just coming back into markets, and of course, you know, the last couple of weeks we've seen some incredibly low volatility in financial markets. Now, that hasn't necessarily changed too much, and FX vols are still very low. I think we need to see a sustained pickup in equity implied volatility before FX markets starting taking note to any kind of great degree. But we are seeing some movement, specifically at an equity level. Equities, obviously, everyone's been very long, trend followers, momentum traders, you know, volatility targeting funds. They've been piling into equities. And I think what we've just seen is a little bit taken off the top. The idea that Donald Trump and specifically Wilbur Ross, the Commerce Secretary, has made the 15th of December and the day the tariff deadline comes into place now a volatility event is something that's shaking markets a little bit. You know, the idea that tariffs have been now placed on Argentina and Brazil, so that tariff man is still very much in place. So the market's asking themselves, how do we go into the weekend of the 15th of December long and exposed to risk if we do see a situation where that 15% tariff on 160 billion does in fact go out? The broad consensus has been that we will probably see a quasi-agreement of sort between Donald Trump and President Xi that pushes the negotiations into January 25th and Chinese New Year, and the idea that tariffs wouldn't actually be enacted. They probably won't be rolled back, but they'd look to revisit that. If we do see tariffs going back, and certainly that's caused a bit of anxiety. Of course, we also saw an awful US ISM number. The market's looking for expansion above 50. Didn't happen. That came in at 48.1. And certainly we've seen some reactions coming through US equity markets. That's flown through into Asia. And if you have a look directly at the prices, have a look at our markets now. The Australian market down 130 points at the moment. Now, banks are taking 37 points of that, but there's a broad-based sell-off. 92% of stocks are lower on the day. So, you know, there's definitely been a move away from equity there. Hong Kong's down 128 points. We've got Japan down 219 as well. So, you know, equity markets certainly underloved there as well today. There's been a strong bid coming through in those markets recently, and I think people are just taking a little bit of the top. If you have a look at the opening calls at the moment for Germany and the UK, they're actually up. So people are actually saying the fact that Wall Street probably didn't fall as much as what European markets have been pricing in. And we're just seeing the reaction, the difference between where US futures were. So certainly expecting those markets to open somewhat on the right foot because European markets were pricing in a far worse tape in the US than what actually transpired. Wall Street calls at the moment. You know, we're actually seeing the Dow up 19 points and S&P fairly flat on that session there as well. Actually, what I think is really interesting is while we saw that volatility in equity markets, if you have a look at oil prices, they're actually up 18 cents today, and copper prices are fairly flat as well. So people haven't been seeing that huge risk aversion across the commodity complex. Gold prices have caught, they're a bit stable on the session there. In FX markets, you know, we haven't seen too much of a reaction in Asia. If you have a look at the chart here with Bloomberg, you can actually see the Kiwi dollar. This is the Kiwi dollar, moves against the US dollar over the last 2 days. It's been the Kiwi dollar which has been the absolute superstar currency. That's now trading against the dollar, the highest level since August. Everyone likes the fact that terms of trade are up 1.9%. in the third quarter. That's a very strong signal. The fact that the government have come out and said they're targeting fiscal spending and now from 20% of GDP into a range of 15 to 25%, that top band is something that people are focusing on and saying that we're actually certainly looking for a fiscal stimulus in a time when the central bank are looking to keep rates on hold for a prolonged period of time. You know, those combination of those three factors is certainly causing the Kiwi dollar to rally, plus the fact that, you know, if you look at the Commitment of Traders report, the market's been very short Kiwi dollars for some time. So that market looks really good. Aussie Kiwi has been coming under pressure. And I'm saying this before we see the RBA announcement, and I'm fairly confident that the RBA announcement is not going to be a volatility event. Yeah, look, I mean, if you look at implied vol, you know, it's very low levels, you know, 9% or so. The implied move over the day is 29 points. So, yeah, I'm not too particularly concerned that it's going to be a volatility event. Apart from that, you know, we're seeing fairly tepid moves. And, you know, what I talked about with what's happening in equity markets based on what we saw from Donald Trump and Wilbur Ross, putting that 15th of December into as a volatility event, you're not really seeing too much of a move in dollar CNH. While equity markets were down, we didn't see too much of a move in dollar CNH. Actually, soybeans were down 1.5% as well. So, yeah, there's a lot of things that don't make a lot of sense, but I do think we are watching that trade date there. So certainly equities under a bit of pressure. That's flowing through into Asia. Let's see how tonight's US session plays. I think it's going to be very important there.